Hi, good morning, good afternoon, everyone, based on the time zone you're in. My name is Ankur Rawat. I'm the Director for Products and Solutions for Newgen. And today I'm going to cover the webinar for the session Account Opening for Customer Lifetime Value, which is also a short form of, with CLTV. So if you have any questions during the session, you can always put those in the chat box or the questions panel within GoToMeeting. And towards the end, in last 5 minutes, we'll take any questions that you may have for the webinar. So let's get started. Now, as the topic suggests, we are trying to connect the account opening concept with the concept of customer lifetime value. And while you all may be very familiar with this concept, it is important to kind of define what customer lifetime value is. So it's really the prediction of the net profit attributed to an entire future relationship with a customer. So whatever profits the entire relationship will generate over a period of time, be it during the initial phase or towards the complete engagement life cycle with the cross-selling, upselling, all of that. So what is the actual profit that can be attributed to that relationship is what the customer lifetime value is. Okay. And as per industry standard practices, we have seen that on this chart that you see here, the customer lifetime value, if we look at the on a graph with number of customers and the retention period, typically with the customers who are with the institutions for a short period of time, they are the ones who are not that much profitable. So the profitability or the customer lifetime value for them is on a lower side. Okay. Then we have most number of customers who are there with the institutions like banks, credit unions for for a good amount of time. So 60% of those customers are active and profitable customers. But the real value is derived from the highly profitable customers who are there with the institutions for a longer time, thereby resulting in a higher customer lifetime value. Now, why is it important to understand this concept, and then how do we apply, how do the banks, credit union apply this concept? So it's primarily required as well as leveraged in a couple of scenarios. One is the customer acquisition and another one is the customer relationship management. Now, when it comes to customer acquisition, how is the institution or the banks, credit unions acquiring new customers, new members? Okay, so a lot of these institutions use the average customer lifetime value to drive the customer acquisition costs. So what is the amount that you are willing to pay to acquire a customer is typically based on the customer lifetime value that you can derive out of that customer. Okay, and this is where you would have seen a lot of campaigns or schemes or offers from the banks on credit cards, the offers on the initial deposits and cashback or free cash of $300 on opening a deposit account. So all of those are part of their customer lifetime value strategies that they have analyzed and understood that, hey, even if we shell some money to acquire the customer initially, in the longer run, it will be beneficial for the institution. Secondly, the institutions are also segregating or segmenting the customer lifetime value as per the channels from where the customers are initiated or acquired. So the idea is to focus on specific channels wherein the customer lifetime value is on a higher side. Now, a quick example could be if a bank understands that all of their customers coming from digital channels are generating more revenue or buying more products from them, instead of the customers coming via campaigns through their call centers. So depending on those segregations, that analysis, institutions are able to categorize and spend more focus and amount on the specific channels where customer lifetime value is on a higher side. Now, the second part for where the importance of customer lifetime value is the customer relationship management. Now, once you have acquired a customer or a member, how do you ensure that you maximize their customer lifetime value? So this really includes all of your focus on reselling, cross-selling, upselling different products to these customers. So a member who has just come in and they have a share account. Now you are offering them a credit card with $5,000 of limit. After a few months, you offer them home loans or HELOC based upon their residential status. All of these attributes or all of these activities will surely increase the customer lifetime value because it drives the additional revenue for the bank and credit unions. Similarly, for the customer relationship management, there could be differentiated approaches for different customer segments. So you can divide the customers and then spend more on cultivating the loyalty in the most valuable customers. So wherever the segmentation for the customer is deriving a lot of profits, you can spend more time creating the loyalty in those customers throughout the life cycle. Okay. So how do we kind of segment these customers? And this is again one of the industry standard charts wherein the institutions can look at the customers in this particular matrix. So on the parameters of loyalty and profitability, you could have 4 type of customers and members. Okay. Now, the ideal scenario is that all of your members and customers are highly loyal to your organization, as well as the profitability for these customers is also very high. The idea is to retain those customers, to ensure that you do whatever it takes to retain them within your organization. Okay. But then there are other scenarios wherein you may have a customer or member who is low on the loyalty as well as low on the profitability. Okay. Now these are the type of customers which you can just maintain without putting a lot of focus on those. But at the same time, you may want to develop them or nurture them to increase the loyalty and the profitability. Okay. But if that does not happen with these customers, a lot of institutions would really think about the repricing strategies to maintain or outside of the banking, even drop the customers. Okay, so those are the strategies that we have seen in play within the market, but within the institutions like banks, we have seen maintaining is something that is being done for these type of customers. Okay. Now there could be certain customers who are highly loyal, but they do not have a high profitability. So the idea is to develop those customers to ensure that their profitability also increases. On the other tangent, you have the customers who are highly profitable, but they're not loyal, which means that they have multiple relationship with other institutions, and sometimes they would bank with you, sometimes they would bank with the other institutions. Okay, so the idea here is to increase the loyalty of such customers by providing some things which are very unique to these customers and not offered by the other institutions. Okay. Now we have talked about customer segmentation, we have talked about customer lifetime value. How does this tie into account opening, which is something that we are going to discuss today? So traditionally, we have seen that account opening, as and when we say account opening, the one thing that comes to our mind is opening a new account, whether it is for a new customer or an existing customer. When it is for new applicant, what we are thinking about is creating account, creating the customer or members within the organization. So it's a mixture of customer onboarding and account opening. For the new customer, for the existing customers, it may just be addition of a new account to their existing portfolio. So it's fairly simple concept in the industry. And if you look at the workflow, it would really require you to initiate the application for a new product or membership. It would go through a due diligence process, funding for the deposit, and then the account is open. So fairly simple, nothing nothing complicated about it. But what we are saying here is that we are breaking the barrier. Okay, we are going beyond that horizon, and we are saying that hey, account opening should not really stop at account opening. It should expand to customer onboarding, which is immediately once the account is opened, all the activities to ensure that you have onboarded the customer, guided the customer on their services, on the next steps, and how to communicate and transact with the bank and credit union. Secondly, it should also focus a lot on cross-selling, not just during the account opening, but beyond that. So how can we increase the number of products that the customers and members apply for? And how can that be intelligent cross-selling rather than just rules-based or simple bulk cross-selling for the customers or members? And then finally, account maintenance. Okay, now we'll come to that part as well, but we are really breaking the barrier, going beyond the horizon and expanding the account opening platform to cater to account maintenance for the branches as well. Okay, now in this regard, if you're watching this, you may also want to download an article which was published by Jim Marous and sponsored by Newgen. This is also available on our website, which really talks about new customer onboarding and the best practices, industry trends, and the figures, which will be very beneficial for the customer onboarding journey. Okay. Now, why do we want to break this barrier? Why do we want to expand the customer onboarding or account opening to customer onboarding as well? Now, I would like to draw this parallel to social distancing, and we have seen that in this past year, after the flights were opened, there was social distancing, which was maintained. The objective for that was to ensure safety of all the passengers. Okay, but as you can see, and this has been a very strange and usual situation wherein the social distancing has been maintained at the airport, wherein the passengers are waiting to board. But as soon as they enter the flight, they were kind of sitting adjacent to each other. And even if they had shields and masks, they were really not in a social distancing situation. Now, the lesson that we can take from this is really that the objective, which was safety, was duly taken care during the boarding process at the airport. But as soon as the passengers entered the flight, that was really a futile exercise of social distancing. Now, if I have to draw a parallel to account opening, we are looking at great interfaces, great online portals for the banks, credit unions to open the account. Okay, and they get a great experience when they are opening the account, device responsive screen, omni-channel uh, support, and the ability to uh, in a frictionless manner extract all the data from the driver's license, and it's a very straight through process nowadays. But as soon as the customer account is opened or a new account is opened, the overall experience that they have on the customer onboarding is still archaic and still broken. Okay, so if I have to draw the parallel of social distancing with the objective of safety, and account opening with the objective of experience, loyalty, and profitability, in turn, we are really handling this in the online channels. But as soon as the account is opened, all of that goes for a toss. Okay, so what are we recommending here? So with Newgen's solution, which goes beyond account opening, we are offering first of all a great customer experience. Okay, and we talked about the objectives of account opening, which was experience, loyalty, and profitability, which also drive a higher customer lifetime value. So these are all the parameters for the customer lifetime value. So we are saying that with Newgen's account opening, first of all, we provide a great experience before the account is opened, okay, and also beyond that. So we have omni-channel methods for initiating the applications. The members or the customers can go online, they can sit at home and check, access the institution's website and Newgen solution on their mobile, tablet devices. They can call up the customer care, or they can just simply walk into the branches. In all of these channels, they will have a consistent experience for opening the account, for initiating that application. We also ensure that it's a frictionless journey for these applicants or customers, wherein all of the data is pre-populated from driver's license, or if they are an existing customer or member, the data is pre-populated from the online banking portals. The idea is to minimize as much of the data entry as we can and ensure that the experience for these customers is great. Now, beyond that, we are also ensuring that it's a seamless process without any breaks in between, no hiccups in the process or the journey. So this is done by seamless integrations into third-party ID verification, eligibility, and ID authentication tools, fraud check, BSA, AML, KYC kind of tools. So we have seamless integrations into all of these tools to ensure that the analysis for a new customer is done in real time, and the results drive the process going forward. So if everything is okay, the account can be opened instantaneously, but if there are any exceptions, it can be sent for further review within the institution. We ensure that all the disclosures and funding is done online. So we do integrate with the likes of eSign applications, DocuSign, SignIX, or Adobe eSign. So all the applicants are able to provide consent and capture, we are able to capture the signatures via these applications on disclosures. And once they're ready for funding, we host and we integrate with a lot of payment gateways to support all types of funding methods, including debit, credit cards, ACH transactions, or via Plaid, Yodlee, Venmo, PayPal, or even the mobile payment gateways or channels like Apple Pay or Google Pay. Okay, so all of those are supported through integrations into these systems. And the idea is for the customer and member not to stop right here and then wait for some other process for funding or go to the branch for funding. The idea is to have that experience online. And finally, the account can be instantaneously opened by connecting with the core banking system, pre-populating the account numbers for the customers. For any issues or any exception cases, these are all sent to Newgen's back office, okay? And the follow-up can be done, reporting can be seen by the management of these institutions. Now, throughout the customer onboarding, we have personalized communications, post-account opening services, cross-selling, all of that. So it's a great customer experience, which is the first objective for the account opening. Now, going beyond that, we talked about customer loyalty, which is again important to have a higher customer lifetime value. Okay, and for this, while this is a continuous process to ensure that the customers are loyal, so this is typically driven by the personalized communication that you have with the customers, the type of products that you can offer to them, which may be very unique to their requirements. But the very first step for customer loyalty is having a great and smooth onboarding experience. Okay, And as per one of the reports published by Jim Marous, and again, this was a research done by JD Power, part of Newgen's sponsored white paper on customer onboarding. The ideal number of touch points or communications that an institution can have with a newly onboarded customer or member is 5 to 6. And these are perceived communications, which means that if you are sending them 10 communications and they are only opening up and viewing 5 to 6, so it means that you really have to send those 10 communications, because 5 to 6, which is the ideal communication number for highest satisfaction index, will only be reached with those number of communications. Okay. Now, how do we do that? We're able to do that with Newgen's rules-driven, time-driven communications, which can be sent immediately with account opening. So as soon as the account is opened, the congratulation messages, emails can be sent, welcome letters can be sent, signed disclosures, which they would have already signed, are sent for their own records. That's a great experience, because you are really telling them that, hey, this is the application, this is the status, and these are the signed disclosures for your record. Immediately after the account is opened, next step can be guided for these members, for these customers, through emails, through other channels. So you can give a courtesy call that can be reminded from Newgen solution. Okay, you can send them emails on the next steps, wherein they have to download the mobile banking app. They have to enroll into the online banking, and you can also let them know who is the relationship manager assigned, or what is the branch which has been assigned for them. Okay, or it could also be a survey for customer experience, which will be beneficial for the institution as such. Now, even after that, within few weeks of account opening, there could be additional communications that can be sent for a reminder. So if they have not enrolled into online banking, if they have not downloaded a mobile app, if they have not filled the survey, you can always send those reminders. Any personalized communications that you want to send, just checking on them, a courtesy kind of email from the relationship managers always goes a long way in terms of creating the loyalty. Okay, and if they have asked for a few services like cards or checks or safety deposit box, sending confirmation emails for those is also a great or a best practice from the industry perspective. Okay, so we'll talk about just the higher profitability which can be achieved through the intelligent cross-selling. So again, one of the other pillars for customer lifetime value is the higher profitability. So ensuring that the customers are not just there sitting there within your accounting books, but they're also generating a lot of revenue. And that is only possible if you are able to preempt their requirements and proactively understand what they may require in future. So this is typically done by understanding the customer profile through the data that has been captured so far with the customer, and continuous updates from the credit bureaus, from the other type of systems. So as per the reporting that has been done by, again, the Jim Roos webinar article, we are able to see that only 15% of the institutions are able to really sell more than, achieve more than 51% of the additional product selling. So this is a very grim situation, wherein a disappointing number, wherein a lot of customers are just sitting there after the account is open, first account is open, and they do not have any interaction or relationships with these institutions. So how can we ensure with Newgen's intelligent cross-selling or rules-driven cross-selling module, we're able to, first of all, share or offer the new products along with the account opening journey. Now, these are the products which could very well have a very basic due diligence process. So credit cards or additional savings account, these are the typical products that can be immediately offered with the original product and completed as an application in that journey. Okay. Similarly, once the account is opened, we can have delayed cross-selling of loans, investment accounts, And then there could also be event-driven cross-selling. So if there is any update in customer profile, okay, if they have changed the home address, if they have bought a house, so what kind of products will be offered to them is something that the institution can look into. Okay. Again, a quick example is based upon the age, which is for an average American, 34 years of age is when they really buy the home. So for all of the customers that are around that age, you are able to kind of send those emailers on home loans and the kind of products that are offered in those services. So what, based upon the features that we have covered and the way we handle the solution, what we are doing is we are aiming for a connected banking for a higher customer lifetime value. So there are different institutions who are using multiple siloed applications for account opening, a different application for branch account opening, a different application for account maintenance, and even CRM. What we are saying is we are able to deliver one single platform as a Newgen's account opening solution, which can cater to all of these requirements for the banks and credit unions. Okay. So this is what we wanted to cover in today's session, and I hope we have added value to your time. Any questions you have, I'll be more than happy to take those. So there's a question, where can we get this presentation? This session, the recording of this session will be available after this is done. So within next day or so, you can always come here and uh, download the recording or view the recording. And if there's a need for this specific presentation, you can always get in touch with us through our website, and we'll be more than happy to go over this with you. Okay, so there's a question, have you integrated with Jack Henry Scimitar? So yes, Newgen is a VIP member for Scimitar, and we do have pre-integrated solutions with them. So we have integrated with them using SIM Exchange, and that has been done for multiple clients. We have another question. So are the modules for account opening, cross-selling sold separately or as a bundle package? So the answer to this is while these are different modules within the same platform and these are tightly integrated. So we do have options wherein you can pick and choose if you wanted to have just account opening and maybe deploy the solution in future phases for cross-selling, for account maintenance. But essentially, this is one single platform with all of these modular sections or products. Any other questions? Okay, I see one more question. What is the implementation time for the solution? So we have seen that typically the solution is out of the box, which means that it can really be implemented as quickly as 3.5 to 4 months. And then depending upon the scope, so if you're really looking at account maintenance, cross-selling for not just the consumer deposits, but also commercial deposits like business account opening, that could increase a bit, but that's the starting range wherein we have seen that implementation could be done in as short as 4 months. Okay. So I think these are the questions for today. And again, if you have any questions, any suggestions, do let us know. And you can always connect with us through our website. And please feel free to download this recording as well as the white paper on new customer onboarding by Jim Marous, which is available on our website. Thank you and have a great day.